Welcome back. My name is Arya and I don't waste your time, so let's get straight into it. Ladies and gentlemen, in today's video, we're going to be looking at a pretty interesting business, a company that has been quite volatile recently. It's been the point of discussion amongst FinTwit and YouTube and sort of the investment sphere. There's been a lot of talk. Is this a company that is a good opportunity? Is it a super overvalued, high-flying stock that is soon to be disrupted? You know, there's some question marks around, particularly with AI, even in the field that they're in. Is it really an effective method of actually learning languages, which is, you know, what the company does? And of course, we're going to be talking about Duolingo stock, which at the moment is the world's biggest language learning app. And so in today's video, I aim to kind of do like a sort of classic stock analysis. It's been a little while since we've done one of these, but kind of go through the business. What do they do? How's the fundamentals, competitive advantages? And of course, kind of answer the question by the end of the video, is this realistically a good opportunity to be invested in? Of course, I should preface by saying not financial advice as always. Now, to kind of set the stage, at the moment, the business is in its biggest drawdown over the past 5 years. The past 3 years. And so what this chart kind of shows us is the percentage off of the all-time highs that the business is trading at. And as you can see, it's down roughly 45% in a relatively short amount of time. I mean, not too long ago, I think, you know, at the start of May, this is only a couple months ago that the company was trading at all-time highs. And of course, the stock has promptly fell by a huge margin over the past little bit, largely due to AI fears and sort of these new LLMs that are releasing language learning capabilities, language translation, and that sort of stuff. And we'll kind of go through all the risk factors and cover that in detail later on. But I think the best place to start for those of you who are not familiar with what the company even is, or maybe you've heard of it, you don't really know how the app works, this is it right here. I'm actually logged into my own account, and I would assume most people actually use it off of their phone, and that's how they kind of log in every day and sort of learn and that type of stuff. But I've logged in on my computer here, and this is kind of what it looks like. And, you know, like, for example, I'm relearning French here. And so you do these lessons.
Tu vas bien?
You could go through and you would have to, for example, write this in English. So obviously I'm not going to go through the entire lesson here, but like you guys kind of get the idea. It's like this type of thing. Sometimes you talk into the computer or your phone or whatever. There's a variety of different lessons. I think they have coverage on roughly 40 different languages. They recently added in chess, which I can't seem to find on the computer version here, but chess is another sort of avenue they're chasing. I think they talked about they want to expand horizontally into like other sort of categories. They want to do like music, they want to do math and that sort of stuff. And there's like a good amount of optionality that you could do with this, right? But primarily it's a language learning app. And so the next question that we should probably be asking is, how do they actually go about monetizing this? Now, they do have ads in the app and they do make some money from that, but similar to a Spotify where most of the quote unquote free users or like the ad monetized, ad supported users are barely making any revenue, the same sort of thing could be said for Duolingo. If we click on this little common size button, this shows us the revenue segments, but as a percentage of the total business, right? And so I'll kind of go through and toggle all these on, and we'll do a bit of a stacked bar chart here. As you can see, their smallest revenue segment is in-app purchases, which I'm not sure exactly what that is specifically. I think maybe you could like buy like gems or something like that. They have a English test. So they're like internationally recognized as like similar to, I think it's like the IELTS exam or whatever. Like you can actually get an English test done and it's internationally recognized as like an accurate scoring system. If you want to like immigrate to an English speaking country, oftentimes, maybe not Duolingo in specific, but the other exam, it can be used in your immigration application to get into the country, how competent you are at English essentially, right? Next up, they have their advertising revenues. And so this is hovered at about 11-ish% and has dwindled down as a percentage of total revenues, currently makes up about 8% of revenues. And as I mentioned, for the free users, which is the majority of users, by the way, it's like 92% of users are on the free tier, they only account for 8% of total revenues. And again, similar to the case with a Spotify, but actually with Spotify, it's a little bit more exaggerated. It's like 95% of revenues are subscription. Most of the revenues of this business, 85% of it, comes from the subscription that they sell. And the subscription is like unlimited lessons, and it's free. It's like ad free. Yeah, this is exactly what you get. So there's no ads, unlimited learning lessons, and like mistake reviews and stuff like that. And roughly 8.5% of their users, and I could pull that chart up for you as well. Here we are. I just made this. Yeah, so exactly 8.5% of total users are paying for that subscription. I shouldn't say total users, of monthly active users, 8.5% of them are paying for the subscription as well to just have it ad free and so on and so forth, right? And that's pretty much it. It's just a language learning app, and the way in which they monetize is largely through the subscription that they sell. And so naturally, there would be a lot of questions with this business is sort of like a narrow moat company. Like at the end of the day, like, you know, how many people are actually going to be wanting to learn a language? How sticky is the user base? How sticky is the subscription? The subscribers, so on and so forth. Or yeah, this doesn't really seem like, you know, like an S&P global level moat. Doesn't really seem like that great of a business. And frankly, you would be right. At the end of the day, like no matter how you flip it, this isn't that special of a business. They have a very narrow sort of method of monetization, which isn't bad. Like, you know, Spotify's done it very successfully, but like it's a little bit different with this company because I would argue learning a language is sort of like almost like a chore. It's like learning a skill. You have to actually put effort into it and so on and so forth. Whereas like, you know, watching Netflix, for example, or like listening to music, it's not really like putting effort into something. It's more of like a guilty pleasure, and like people naturally want to watch TV and stuff like that. Whereas with this, you're putting effort into learning a skill. And so naturally, you would imagine there's pretty high levels of churn. And so to combat that side of the argument, during my research, I've learned, and I've been using the app myself as well, right? The app isn't actually that effective at teaching you the language. If you wanted to actually learn French or Portuguese or English or whatever the case is, the best way to learn a language is through immersion. So you would actually go to the country, or you would talk with people that know that language. Maybe you pick up some lessons to kind of pick up the basics of conversation and so on and so forth. But the company has done a very good job of selling you the illusion of making progress and learning a language. That's why these people stick with Duolingo for like a year, and like they keep up the streak. And the beauty of the business is that it's kind of gamified the app. That's something that came up a lot in my research, is they've consistently been able to gamify the app, make the lessons super short, the animations and the vibrations of the app. I'm being so serious, by the way. Like, this is really a thing. In a world where like we've completely fried our attention spans to like 3 minutes, the company has really got a winning formula when it comes down to like keeping your attention for a short burst of time with these nice little animations of the Duolingo bird hopping and like these like fun little noises and stuff like that, right? Like you just kind of blast through the the lesson, and that's it. And you know, the ads become annoying at some point. The CEO in his interviews, he talks about like, particularly in North America and parts of Europe, like people are willing to, if they become like a pretty sticky user, they're willing to pay up a little bit just to have it ad free. And they've built like a, you know, multi-billion-dollar business out of what I just described. And so when there's question marks around, you're kind of trying to develop the skill and like it's a bit of a tedious process or whatever the case may be, like it doesn't necessarily align with lazy human intent, that's not really in the equation at all, because like it's become a gamified app. It's a game for you to keep blasting through the lessons as opposed to actually effectively learning the language. I think you guys get the idea. Next issue that kind of came up in my research is that, okay, great, sure, gamified app, whatever, but it's not really effective at teaching you the language. And then by extension to that, you have with these LLMs and Google and ChatGPT and stuff like that, they're starting to create live translations, or they're starting to be able to teach you languages and stuff like that, right? And then again, I would like to shift your focus to the fact that like, most people that are on Duolingo aren't seeking it because it's the most effective way of learning the language. They're on Duolingo because they're making some progress, but at the same time, it's like a game. And of course, the man who jump-started all the discussions on Duolingo over the past give or take month or so is, of course, Joseph. So he started a position. And I read through his post here, and I completely agree. Just because Google announced that they have like a language learning and live translation app doesn't really mean the end of Duolingo. There's a history of smaller specialized competitors doing significantly better than the big techs that kind of just like roll it into their services. And then more importantly, the argument that I would personally make is that there's a total different shift for the person who uses live translations and the person who's trying to actually learn the language itself. And there's a whole argument of like, you know, if you have live translations with like ChatGPT, nobody would really have to learn a language at the end of the day. And again, that doesn't necessarily spell bad news for Duolingo, because I would argue there's a huge number of people that actually want to learn languages to begin with. They want to be able to natively speak it themselves as opposed to have a phone in between them, right? So I personally don't really buy into like the Google ChatGPT live translations is particularly bad for Duolingo. I should frame it like this. I don't think those, however many paid subs they have like 11 million paid subs, I don't think these people will churn as a result of live translations. If I were to make a guess, I think this chart will continue to go up and to the right because a higher penetration of users for Duolingo will convert to paid users. And additionally, there's going to be a higher number of users just coming to Duolingo to begin with, testing out the freemium model, so on and so forth. Because again, it's the illusion of trying to speak a new language and learning it through that gamification. I do also have a Discord, so I kind of shared some of my thoughts around particularly the fundamentals and stuff, which is what we're going to do now over on the Discord. For the price of a coffee, you come hang out with me and 250 other investors. Link for that is in the description. And so I mentioned this right at the front. I said I have zero interest in opening a position in this business because I just can't see myself holding it super long term. At the end of the day, no matter how you spin it, this is a fragile, narrow moat business. And I don't think at some point in the future they're going to expand that mode into like something like we see with a Spotify or like anything like that. I think, there's some mild network effects. They have a very strong brand, so on and so forth. But I can't see this business being super wide moat. And at the end of the day, that is the primary criteria of investment for me. If you look at my portfolio today, no, not all of these businesses are wide moat. I would say most of them are. I think Amazon, Google, Uber, ASML, FICO, super wide moat businesses. Fiserv is a bit of a toss up. Some segments I would argue are super wide moat. I think the Clover segment has a decent amount of competition. And then TMDX and HIMS are like my small speculative positions, which I wouldn't say they have a wide moat today because they're so early stage, but I can see the road towards having a wide moat 5-10 years down the line. That's why I have them in the portfolio. By the way, I should mention, I'm thinking of actually getting rid of HIMS, but that'll be a topic for another video. But like, TMDX, for example, like they make machines that can keep organs alive after a person is deceased. And like they're scaling their business. They're early industry leader. I've done a video on them, which I'll link at the end of the video if you're interested. But like they're scaling, they're kind of building out their infrastructure and building out their ability to carry out these operations at scale and so on and so forth. So I'm happy to kind of have that as a small speculative bet. If I were to buy into this business, it would be probably like a 1-2% position. And again, I have these 1-2% speculative positions. I have no problem opening up speculative positions, but my long-term goal with them is that I could see them becoming a wide moat business. And I just can't see that with Duolingo. In my eyes, it's just a very, very fragile business from what I've observed. I also mentioned here, I dislike the fact that they're in the education space, which is sort of a chore, whereas like Netflix or something is a guilty pleasure, aligns with what humans want to do intrinsically, which is be lazy and watch TV. And now we get to the juicy stuff. We get to the numbers, right? With all that being said, I do find the current growth prospects of the business super appealing and compelling. And I also think the valuation isn't that bad. People go over to Duolingo and they see that 100 times trailing PE and they're like, oh God, this is just such an overvalued business. It's a fast growing, high flying, overvalued business. They don't want anything to do with it. Or they make the mistake like me of looking at that EV to sales multiple, see it at 14 and think, oh, this is such an overvalued business. Both of those metrics don't actually fully reflect the valuation of this business or how cheap or expensive this business is. And I'll kind of digest that for you right now. And so remember, this is largely a subscription business. So they have a huge degree of reoccurring revenue. So when we're looking at forward analyst estimates, for the most part, they're right. Their own guidance, for the most part, again, like it seems to be pretty accurate, just purely off the back that it's a subscription business and they have that track record of being able to grow revenues sustainably and consistently. And so we look at the next 12 months revenue. They're estimated to do $1.15 billion of revenues. Over the past 12 months, they've had 36% free cash flow margins, which is very, very impressive. They've consistently been able to raise those free cash flow margins as well. So I'll kind of show that to you right here. As you can see, over the past couple of years, they've consistently sort of went from being super unprofitable when they IPO'd to now having 37% free cash flow margins. And it's increasing incrementally, right? Like it's kind of tapped out with growth. Now, with that being said, a huge portion of those free cash flows is stock-based comp, which of course, conventional wisdom says we need to deduct stock-based comp from free cash flow to land at the true free cash flow and profits that the business is producing. But something to point out here is that stock-based comp, the chart I'm showing you here is as a percentage of total revenues, this has been decreasing. Put another way, their stock-based comp, proportional to their free cash flow growth, is growing slower. Perhaps a better way to visualize that is, as you can see, the free cash flow is just going up and to the right, and the stock-based comp is also increasing, but at a slower pace than the free cash flows. For example, just on the past 3 years, free cash flows have grown at 100% CAGR, whereas the stock-based comp has grown at 22% CAGR. Obviously, the free cash flow growth rate isn't going to keep up like that, but still, it should realistically be north of 40% growth for the next handful of years. And so you put all of those numbers together, that means that on a forward basis, you're looking at about $300 million of stock-based comp adjusted free cash flow. And that lands you on a forward basis at about 45 times forward price to free cash flow at today's current market cap of about 13 billion. And actually, they have a good amount of cash on their balance sheet. So, I mean, if you want to factor that in, it's about 42 times EBITDA free cash flow, right? So, on the surface, pretty expensive, but then you remember this is a business that is growing revenues 40% year over year. And I think in the most recent quarter, they just re-accelerated revenue growth in the most recent quarter. And going back to it, this is a subscription business, so that's pretty sustainable revenue growth. I mean, perhaps if we're looking at it on like a multi-year view, that can likely slow down. But like you just look at just the total number of monthly active users coming on the platform, and it did drop pretty significantly in the most recent quarter, but you're having just 25-ish% organic growth of more users coming onto the platform, right? And at the same time, again, I'm just going to keep reminding you, like the core revenue driver of the business is the subscriptions. And so we should focus on the growth of those paid subs. And so while the total number of monthly active users is growing at roughly 25%, you consistently have a higher penetration of users being on the paid plans, right? Only a couple of years ago, only about 4% of MAUs were paid subs. Now that's doubled to over 8.5%. I basically say all this to say, like, the revenue growth is pretty durable. It'll probably slow down in the next couple of years though. And so 45 times price to free cash flow with minimal margin expansion, you're looking at like around 40-ish% free cash flow growth in the future. And so honestly, that's not that bad. You guys know I have this spreadsheet, and I didn't bother putting it in because I now run this based off operating income. But what we do with this spreadsheet is you take the price to free cash flow, price to EBIT, PE, whatever you want to look at. And so you divide the PE by, like, for example, the EPS growth rate. In this case, I take the EV to EBIT and I divide that by the EBIT growth or operating income growth, right? So in the case of like, Adobe, it would be like 18 times EV to EBIT. You divide that by 16% growth, it lands you at 1.14 EBIT to growth multiple. If we run the same exact exercise for free cash flows for Duolingo, lands you at about 1 times free cash flow to growth, which is, again, like, it's not that bad. Sure, the moat isn't there, and like there's a lot of question marks, and it's a pretty volatile stock, so on and so forth. But particularly on a forward basis, it's not that expensive of a valuation. I think there's definitely some risks of the top line of the business slowing down very significantly. But then at the same time, you have that higher penetration of users becoming paid subscribers that is also kind of able to support the top line for a little bit longer. But as I kind of prefaced earlier in the video, like, this business does not interest me. I'm not going to be opening a position. I think for the people who are invested in this, like, as a small speculative bet, if you believe in the company, if you like what they're doing, yeah, by all means, like, it's definitely has potential to do super well in the future. The valuation is not that expensive. It's traded at significantly higher valuations in the past. I mean, when it was at all-time highs not too long ago, it was at 60 times forward price of free cash flow. Now it's at 30 times. You know what I mean? Like, the stock moves around a lot. So to kind of summarize my thoughts, like, I think it's definitely undervalued here, but I won't be buying. And at last, thank you very much for watching. The TMDX video will be up on screen now. And again, a reminder, if you want to come hang out with me and 250 other investors, we have a Discord, which the link will be in the description down below. Price of a coffee, come hang out. We'd be more than happy to have you. Thank you for watching and have a great day.